Who is actually better for the US economy? Republicans or Democrats? The left or the right? Blue or red? Well, many people have many opinions about this, but in this video, we're going to actually answer this definitively. Is a Republican president or a Democratic president actually better for the economy, or is it possible that they're just two sides to the exact same coin? No difference whatsoever. We're going to look at the facts. We're going to look at the data. We're going to go back to the last 40 years and examine every single president and how the economy did through 7 different factors underneath every single president, average them together to be able to come up with an actual answer. For our presidents, this is our lineup. On the Republican side, we've got Reagan, Bush #1, Bush #2, and Trump. And then on the Democrat side, we have Carter, Clinton, Obama, and Biden. Now, some of the stats we're going to look at are average per year for the president, and then some of the stats are going to be the cumulative total change underneath their terms. And you'll see here that it actually is fair, even though some presidents had 1 term, some presidents had 2, because if you look at the Republican side, we've got Reagan and Bush #2 as 2-term presidents. We've got Bush #1 and Trump as 1-term presidents. And on the Democrat side, we've got Carter and Biden as 1-term presidents, and then Clinton and Obama both as 2-term presidents. So for both Republicans and Democrats, we've got 2 1-term presidents, and we've got 2 2-term presidents. So the total years under the left and the right are going to average out together. We're going to come up with some very good, solid data-driven answers here. And for each president, we are going to look at 7 economic factors. We're going to look at GDP, national debt, inflation, stock market, real estate, real household income growth, and then real household net worth growth. We're going to go from oldest to most recent, starting off with Jimmy Carter. Underneath President Jimmy Carter, we had an average GDP growth rate of 2.8% per year. The national debt increased by 42.7% underneath Jimmy Carter's watch. And if that sounds like a lot to you, just hang on to your pants, because some of these numbers are going to be absolutely outrageous. If we break that down by year, it was 9.57% per year on average underneath Carter. And because Carter's presidency was coming off of the back of the 70s, we had a very high inflation rate on average of 9.9% underneath Carter. However, we had decent stock market average returns at 6.9% per year. And this is a chart of what the stock market looked like underneath Jimmy Carter. And if you're looking at that chart and thinking there's no way that that was an average 6.9% return because it looks basically flat, now you know the difference between average annual return and compounded annual growth rate. Those are very important for your investing. You should do some research on that. If we look at real estate average returns, it was 1.4% underneath Carter. Median household income growth was on average 1.32%. And if you look at this chart, it does break it down by ethnicity, going from 1967 through 2022, just so you can get an overall view of what it looks like overall. But it was 1.32% per year under Carter. And if you contrast that with the real median household net worth growth, we saw a 9.67% increase on average of household net worth under Carter. So overall, not too bad. Not great, not terrible, but it really just serves as a baseline as we start looking at the following presidents. And up next, we have President Ronald Reagan. This is considered to be the best president by many boomers who are conservative or right-leaning, which is ironic considering many of them also say that fiscal responsibility is one of the most important things for a government. We're going to be looking at some shocking numbers underneath Reagan. All right, so 3.6% GDP growth, not too shabby, but holy cow, a 186% increase in the US national debt, starting off at a little over $800,000, ending at $2.8 trillion. Again, 186% increase in the national debt under just one president. That's a record. And if we break this down by year, that was on average 13.7% increase per year, with the inflation rate falling to an average of 4.6% underneath his presidency. And the stock market had great returns, averaging 10.2%. And this is what the stock market chart looked like underneath his term. While real estate did well during some years, poor during others, he averaged 1.4%, and median household income growth was a paltry 0.61%, while household net worth growth was 8%. And if you're wondering why I'm showing the inflation numbers on these charts as well, it's so that you can get an idea of what the nominal numbers were, what the inflation numbers were, and then I'm stating the real numbers, which are nominal adjusted for inflation. So we had some absolutely staggering numbers underneath of Reagan, but let's not stop there. Up next, we have Bush number 1, Bush Sr., George H.W. Bush. Per year, we got a growth rate of 1.8% for GDP under Bush Sr., with the national debt growth of 54% total. But remember, this was only just one term. So if we break that down by a year, that is still 11% per year. The inflation rate was 4.3%, about the same as his predecessor, with stock market returns of 11%. And this is what the chart for the stock market looked like underneath Bush Sr., and the first president in our lineup with a negative real estate average return at negative 2.5%. And for those of you who are younger and don't remember, this was Bush Sr. This was not the financial crisis when the real estate market crashed. This was back in 89 through 93. Median household income growth was also slightly negative, coming in at negative 0.75% per year, while the median household net worth grew 4.79% on average per year. Now we get to old Jeffrey's best friend in the blue dress, Mr. President Bill Clinton, claiming a GDP growth rate of 4%, while only increasing the national debt by 32% under his entire 2 terms. Absolutely fantastic numbers there. Only 4.19% per year on average. Inflation was also lower underneath his watch at 2.6%, while stock market averaged 15% per year on average. This is what the stock market chart looked like under President Clinton, and real estate did 2.25% on average underneath his watch as well. The median household income grew by 1.29% per year, and the household net worth grew by 5.56% per year. And now we're moving into a little bit more familiar territory for many folks, especially considering the financial crisis happened underneath this next president's watch. That is no other than Bush Jr. GDP grew on average 2.4% under George W. Bush, while he increased the U.S. national debt a whopping 105%, which averages out to about 8.4% per year, growing from around 6 trillion at the start to about 12 trillion at the end of his term. The inflation rate was 2.8% on average during his presidency, and the stock market returned a negative 2.3%, which is understandable considering the stock market had a severe crash at the end of his presidency from the financial crisis. This is what the chart of the stock market looked like during his presidency. You see the crash there at the end. And surprisingly, he still eked out a real estate average return that was positive at 1.22%. Despite the fact that the housing crisis happened underneath his watch as well. Median household income declined by 0.26% underneath his watch, starting off at about $66,300 and ending at $65,850. Median household net worth still grew though, about 3% per year. On average, it was $426,000 at the beginning of his presidency, and at his end, it was about $427,000. Now moving on from Bush to Obama, hopefully this is going to start to bust some myths that people have held about the differences between presidents and policies. Because as we'll see is a relatively common theme moving forward through the rest of the presidents, it seems like it's just everybody playing a game of bigger or bigger. GDP growth under Obama was a normal 2.3%, while he increased the US national debt by 70% across 2 terms, which averages about 8.28%. The national debt started off at around 12 trillion underneath his watch and ended at about 20 trillion. The inflation rate averaged 1.4% under Obama, while the stock market averaged 12.8%. This was largely helped by the recovery from the bottom of the financial crisis where his term began. Real estate averaged a 1.17% average annual return, while the median household income grew by 0.97% per year, starting off at around $65,850 and ending his presidency around $72,000. And the median household net worth grew by 5.3% on average per year, starting starting off at around 527,000, ending at 818,000. Moving on from there to the orange man himself, we get to Donald Trump with GDP growth averaging 2.3%. And this is again going to come as a shock to some people that the GDP growth has basically been the same this entire time. We have not seen any really crazy outliers. The US national debt increased by 40%. You may look at 40% and think, oh man, well, that's really nothing. But again, remember, this was just one term. That average was 8.06%, which is pretty close to the past few presidents. The national debt started off at $20 trillion, and when he left office, it was closer to $28 trillion. The inflation rate was 1.9% underneath Trump, and the stock market averaged returns of 13.6%. This is what the chart of the stock market looked like during Trump's presidency, and real estate averaged returns of 5.5%. The median household income growth was 1.55% on average during his presidency, starting off at $72,000 per household, ending at $76,000. And the median household net worth grew by 8.3%, starting off at $818,000, ending at $1.15 million. Now, I just realized I didn't explain this earlier, so I'll explain it now why I'm using average numbers in some places and median numbers in other places. For those of you who are not familiar, average you get by taking the total of every single one, adding them up together, then dividing by the total number of units, and you get the average. So to get the average score in a test room, you take the score from every single student, add it up together, then divide it by the number of students, and you get an average of, 96% or whatever the average is. That works when outliers are not possible. So you're never going to get one student who gets 1,000,000% on one test, skewing the entire classroom's results. So in any area where you could have outliers, where one year or one student or one number could skew the results to the upside, then it's more helpful to use the median if you're trying to get a good look at what the typical number is. Median just means you line everybody up and take the middle person and see what the number is. So where possible, or if more applicable, I'm using the median numbers. And if it's not possible, then I just have to use the average. And now let's move on to the current president. Maybe not for long. We'll see Mr. Joe Biden. GDP growth has been 2.2% per year, with a national debt growth so far of 21.8%. On average, that has been about 7.41% per year, starting off at 28 trillion, and to date, it is at a little over 34 trillion. The inflation rate back up to some higher numbers that we haven't seen in quite a few presidents at 5.7%, with the stock market average returns at 11.1%. This is what the chart of the stock market has looked like so far under Biden, and real estate has returned 4.42% on average. Median household income growth was negative 1.36%. We only have the data up to 2022, but on a real inflation-adjusted basis, median household income has actually declined. And the median household net worth has actually declined as well, going from 1.15 million down to 1.06 million. This is why I specified just now about median versus average, because this is not the result of the left-leaning agenda to rob from the rich and give to the poor. That is the median number. So it's taking the middle person. It's not being skewed by billionaires losing money. And now for the final summary, taking a look at all that data, because you're probably looking at it through your biases, and one was a financial crisis, one had a war, one had this, one had that. Guess what? We're going to look at the raw data. We're going to put it all together. We're going to summarize it. We're going to average it and see who actually is better or worse for the economy, the left or the right. Getting rid of all the noise, summarizing it together. To start off, we are going to look at the GDP growth over the last 40 years. Overall was 2.68% per year. So that was the total on average the entire time. For Republicans, they got an average of 2.53%, which means Democrats got 2.83%. So the winner for GDP growth is the Democrats. And yes, 2.53%, 2.83%, very, very similar, but there's still a slight edge there. So Democrats get the win for GDP. Next one, we've got the US national debt, which over the last 40 years has grown on average 8.86%. Of that overall average, Republicans are responsible for 10.35% average annual national debt growth, whereas Democrats are responsible for 7.36% average annual national debt growth, which means Democrats claim the win for the US national debt growth as well. I can feel some people sweating already, starting to write the comments. This data must be wrong. Don't worry, we're not done yet. Let's move on to the next one, the inflation rate. Overall, over the last 8 presidents, we've seen an average of 4.15% average inflation rate. Republicans responsible for 3.4%, with Democrats coming in responsible for 4.9%, giving the win for inflation to the Republicans. Next up, let's take a look at the stock market. The stock market median returns for the last 40 years have been 9.8% per year, with Republicans responsible for 10.2% per year, while Democrats responsible for 8.9% per year, giving the stock market average returns as a win to Republicans. And again, the note there for using median numbers for the stock market: number 1, using compounding annual growth rate there. Number 2, using median to eliminate the skew from any outliers. If there was 1 year with a crash, 1 year with a big spike, if that were to skew the results, that is eliminated by choosing median numbers here. Again, median is more reflective of the typical experience if you have the potential for one piece of the data to be an outlier to skew the results of the average. Next, we have the real estate average returns coming in overall at 1.84%, with Republicans seeing 1.41% returns for real estate and Democrats seeing 2.27%, giving the win for real estate average returns to the Democrats. Next up, we have the real inflation adjusted median household income growth. The overall income growth has been a paltry 0.42% on average. Republicans responsible for 0.29% of that, and Democrats responsible for 0.56% of that, giving the win for income growth to Democrats. Slight edge there. Even though 0.29 and 0.56 are both absolutely terrible for real income growth over the years, slight win to the Democrats there. All right, last one but not least, the inflation adjusted median household net worth growth. Overall, we've seen a 5.46% growth in median household net worth. 6.06% of that is Republicans, and Democrats, we see a 4.87% growth, giving the win for net worth to Republicans. So there were 7 pieces of data here. Obviously, there's going to be one winner. I'm sure if we included different factors, you could find more that were on the Republican side. You could probably find more that were on the Democrat side. I'm sure if you looked at average versus median on some of these factors, you could come up with your own results. But this takes away a lot of the noise. You can see from this chart, these numbers are all extremely similar. And whether each economic factor benefits you or does not benefit you depends on you, which means that you might look at this chart and say, hey, Democrats are better for the economy. Other people might look at this and say Republicans are better for the economy. But guess what? Neither of them actually are, because when you take a look at the GDP growth, which is almost identical, the national debt growth, the income growth versus the net worth growth, the only thing that presidents or any governments can do in order to influence any of these numbers is rob Peter to pay Paul. Democrats tax more and then they spend more. Republicans borrow more and they spend more. Both taking from one group of people in order to benefit another. Both parties increase the debt. Both parties increase the spending. Both parties increase the theft. Both parties keep the good numbers going up just enough to keep people just satisfied enough that they don't revolt. Because even the Democrats' numbers of 0.56% median income growth per year is absolutely despicable. Which brings me to my final point. Nobody is coming to save you. It doesn't matter who wins the next election or who loses. It won't materially change anything for you, your income, your net worth, your wealth, unless you choose to be a slave to the government. Unless you choose to live your life in a way where the only way you benefit is to have the third party, the man with the gun, the government with the monopoly on violence, rob Peter to pay you Paul. And that is a terrible way to live. So instead of hoping that somebody will get elected that will make changes that will benefit me, especially at the expense of somebody else, we can ignore it. And we can just decide, I'm going to control the controllables. I'm going to focus on the things that I do that produce results. I'm going to make my life better and make the lives of those around me better. But unfortunately, hoping that the next president to get into power is going to radically change your life for the better is a fool's errand. But if you'd like me to help you keep an eye on the things that actually matter, the news that is signal and not noise, the ideas that you can take and implement into your investing strategies to protect your portfolio from crashes, from economic crises, and grow your wealth significantly over time. That's exactly why I've launched my brand new newsletter. I'm calling it Letters from a Heretic, kicking it off with a 5-day series called The 5 Most Dangerous Ideas in America. You're going to love it. You can sign up. It's completely free. Link is in the description below. As always, thank you so much for watching. Have a great day.